Hi, this is our Capstone year-end performance report. Within our first section, we will be discussing our business plan. So the strategy overview for our company was we would price products at a higher price in comparison to the other companies that we were competing with during the simulation. We predicted demand for our product would be a little bit inflated, and consequently having our R&D department striving to keep products updated and efficient. As a company, we wanted to stay rooted with competition in the research and development team and production to possibly earn a competitive advantage in comparison to the other teams. Our research development strategy was to have a focus on creating competitive advantage opposed to creating low costs. As a group, we chose to focus most of our efforts in R&D in the high performance and size segments compared to other segments. We would be investing more of our funds into the research and development team rather than finance or marketing. The marketing strategy was to have promotions and early release demos distributed to allow customers to try our product at a lower cost before investing in it completely. Our production strategy overview placed an emphasis on an assemble-to-order strategy, which would help avoid overstock and meet the demands of the market, and as a result would help lead us to avoid inventory issues. It would also aid in deciphering customer demand and would assist in our sensor production, as well as meeting the production demands in the segments, which would lower finance expenditures. Now, the finance department strategy overview, we sought to seek investments from venture capitals in our first year, and it would allow us as a company to invest our funds to further our production capacities. With the access to capital that we would have from these venture capital firms investing in us as a company, it would provide us with not only capital, but industry guidance and connections from the investors, knowledgeable in the industry, and as a result, Chip 5's plant would be capable to produce a high demand of chips. Here is our round-by-round analysis. During our round one, we were in first place and we did make a significant amount of profit. The negatives were, however, customer satisfaction, round margins, market share rates, and these three aspects that I just stated were less than 50 points. Future improvements that could have been made after round one were buy and sell capacity, increase our automation, and issue stock, buy stock, etc. During round two, the positive was that we did have good returns on sales due to our corporate contribution margin being 31.4%. The negatives were, however, that our stock price fell by $27.84. We did have to have an emergency loan of almost $19 million, and our profits were negative at around $7.7 million. Future improvements that could have been made after round two were to increase our profits to a positive number by analyzing the price of our products, decreasing our inventory levels with better forecasting of production, and create a better plant improvement plan. With round three, we did have good returns due to our corporate contribution margin, and we did avoid an emergency loan. However, once again, our stock price fell again by about $6, and our profits were negative at about $6 million. Our inventory levels are higher for the lower segment. Future improvements that could have been made after round three were to increase our profits to a positive number again, and decrease inventory levels, and improve stock price. During round four, our positives were that we did have good returns. We also avoided another emergency fund, and our stock price increased by $4.50. The negatives, however, were that our profits were negative this time around by about $2 million, and our inventory levels for most products were high in size. Future improvements that could have been made were to increase our profits to a positive number once again by analyzing customer awareness, decrease our inventory levels once again by better forecasting production, and improve stock price by increasing levels of debt. During round five, we had good returns on our sales again due to contribution margin. We avoid another emergency loan. Our stock price increased by about $10 this round, and our profits were finally positive at a little over $4 million. The negatives were, however, our inventory levels for most products, but specifically high in size. Future improvements, we could increase our profits to a larger positive number, decrease inventory levels with better forecasting of production, and once again improving our stock price by decreasing levels of debt. Round 6, we had good returns on our sales due to our corporate contribution again. We avoid another emergency loan fund. Our stock price increased again to $8.46, and our profits were positive at about $7 million. So the overall summary of our company, how did we perform compared to our projections? We honestly did not do well compared to our projections in the beginning. We had an amazing first round. However, our team struggled through the remainder rounds in almost every single department. The best decisions we made as a team were to automate incrementally, retire debt, achieve higher contribution margins that we saw consistently being achieved round 1 through 6, increasing our ROA, focusing on TQM, and increasing our stock prices every single round. Selling capacity in the 5th round was our biggest turning factor in helping our company increase our revenue, and as we noticed, it was the first round since the first round that we had positive profit revenue. The worst decisions that we made as a team were we did not adequately forecast our production, and it eventually led to poor inventory levels in the high and size segments. Consequently, the high inventory levels for some products negatively impacted the company's financial performance, especially once we were issued an emergency loan in the 2nd round. What did we learn as a team in this simulation? We learned the importance of accurate forecasting and inventory management. Also, we learned the benefits of increasing automation and utilizing stock options within companies.